Back with closing trades, right here in 80 now, and the closing trades are looking quite okay. We are holding on to our morning gains. 22,000 for now, of course, is staying put. News out on TCS that they've signed a 7-year deal. We will get you more details on that. But let me take it across to Ansh, find out what are some of the volume buzzers as well in trade. Ansh?
Right. So firstly, CG Power will be in focus as stock has given a breakout from its inverted head and shoulder chart pattern, touching record high level as well. It has also registered biggest single weekly gain in over a year. Apart from this, Engineers India will be in focus as the stock has snapped 4-session losing streak, registering its biggest single session gain in over 10 months with volume of over 3 times its 20-session average volume, and it has also surpassed about 100 DMA. Lastly, Hitachi Energy will be in focus as the stock has given a breakout from its reverse head and shoulder chart pattern, touching record high level, and it has been advancing for 6th consecutive month, advancing by more than 70% in last 6 months.
Okay, Ansha, thank you so much for that. Keeping an eye out on that one. But, let's also carry forward the conversation now. We do have Kunj Bansal joining in with us as well. Kunj, very good afternoon. Thank you so much for joining in with us. And Kunj, let's start with just talking and getting a sense in terms of what you're making of the market move today. Outperformance coming in from the broader markets again.
Yeah, obviously after the correction that we saw in the short term over the last few days, if we calculate in number terms in large cap, I don't think the correction was any significant in percentage terms. It was hardly 3-4% from the peak of Nifty 22,500 odd. But yes, a large and mid cap is where we had seen significant correction in index terms and more so in individual stock terms, which obviously was in line with the kind of disproportionate return also or the outperformance that small and mid caps had given over the last quite a long number of months. So I guess it was more of a short term kind of thing. The market has to keep giving the sense of the fact that equity is not a one-way straight asset class. It's not a fixed income kind of asset class which will keep giving you returns at all the periods of time. There are risks involved, and market has to keep giving some corrections also for the fresh set of money which is waiting on the sidelines to come in. Of course, the valuation becomes an issue. If market keeps rising one way, then we have the valuation. So for us in India, the question of valuation anyway remains a challenge. We all keep talking that the Indian markets are always expensive. So the largest growing economy in the world obviously is expected to be expensive. One can't imagine the highest growth rate economy being available at a cheaper valuation. But within that, these kind of corrections are something that is necessary to keep giving those intermittent correction of valuation. The problem that happens, especially for retail investors, is that he tends to shy away even with these corrections and builds in a mindset that maybe there'll be more correction. That is something that is always difficult to predict, given the way the macro economy of the country has been remaining strengthened, and with inflation coming under control, with fuel price having come down, unless all things remain in place, we could see CPI coming down further. So one has to keep that confidence and take a call.
Couldn't just wanted to understand whether in the recent correction you've been a buyer at all within small and mid caps specifically. I know you can't talk stocks, but any pockets after the recent ease off which are looking interesting and sort of coming back to the value zone.
Yeah, so to start with, as I said, obviously these corrections are the time points that give you the relative valuation correction, and as a result, relative safety to invest in terms of the combination of fundamentals and valuation. And then one has to take a call. If one is not comfortable taking a full call, one has to take a part investment call. Moving on, if I look at the numbers that are there for the previous few quarters and based on the order books that the managements have talked, and the valuation correction taken together, and juxtapose it with the fact of the overall Indian economy doing well and which areas doing well. Capital goods as a space is the one which looks like will continue to do well, given the way the order books are there, given the way the execution has been happening, and given the way selectively raw material price correction has been supportive in terms of margin improvement. So that is an area that seems to be giving investment opportunities. Extending that, auto and auto ancillary, there the demand finally seems to be picking up. In fact, demand has gone down to show a strength in the two-wheelers also. Earlier, it was getting restricted to the higher end of the vehicles, which is passenger vehicles. But now we are seeing good demand in two-wheelers also. Of course, stocks have moved up sharply in that period, but wherever there is a correction. So these are some pockets which one can look at.
Okay. We'll keep an eye out on that and those pockets there. But it's that time of the year when most of us will be rushing to file our taxes, and as 31st March deadline approaches. Now, so Snehi is joining in with us, and a ready reckoner is there for you all in terms of the last minute tips that you can do in terms of how you should be actually saving some money. What is it that you should be looking at? Snehi, take it away.
Well, yes, 31st March is just around the corner, and if you've still not paid your tax and you're looking for some ways to save your tax, we've got your back. Now, remember to make use of some of the ATC section deductions. Now, ATC investments are the most common way in which you can get some tax deductions and save your money. Now, the maximum limit under this section ATC is 1.5 lakh rupees per annum, and let's talk about some instruments that will help you make use of this ATC deduction. Let's start by talking about PPF. PPF is a public provident fund. It's a fixed income security provided by the government. Remember, deposits that you make to the PPF are exempted from tax. This will reduce your tax liability, and the interest that you also earn from PPF is tax exempt. Now, the catch is that the maximum amount you can invest in a year is 1.5 lakh rupees, and the lock-in period is 15 years. Moving on, the second instrument is ELSS, or Equity Linked Savings Scheme, and these are equity funds that invest a major of their corpus into equity or equity related instruments. It allows an individual or an HUF a deduction of total income of 1.5 lakh rupees, and this reduces the tax burden, and it comes with a mandatory lock-in period of 3 years. Moving on, another hack that we have for you is you can pay off your health insurance premium. The premium amount paid for health insurance is tax deductible under Section 80D of the Income Tax Act. This section will allow you to claim deductions of up to 1 lakh rupees for your premiums that you pay towards your health insurance for yourself, for your spouse, for your children, parents, or any other family member. The fourth hack over here is you should pay off your home loan. Now, if you've taken a home loan and if you're paying an EMI on this home loan, remember this EMI is also tax exempt. Under Section 80C, the tax burden can be reduced by paying off the principal amount of your home loan to the extent of 1.5 lakh rupees per year, and various other acts like ATEE and ATEEA will also allow you various exemptions when it comes to the interest that you also pay on this EMI. Lastly, let's talk about tax loss harvesting, because well, markets have been topsy-turvy, and in this recent correction, if you've incurred losses but you haven't booked your losses, you can book your losses and set it off against your gains that you have made previously. Also remember, long-term capital gains up to 1 lakh rupees are exempt under Section 112 of the Income Tax Act. So well, here are some quick hacks that you can still make use of before filing your income tax return on the 31st of March.
Okay, thank you so much for that, Snehi. We'll keep an eye out on those tips, just a few days away. Let's keep an eye out on that. Some way to save your money, save your taxes. Let's do that. But Nifty, as of now, 22,000, managing to hold on to that level as well. Kunal, I'm going to come to you and talk to you about a couple of names that we should highlight. Polycab. What's the thought on charts for Polycab? How should we be looking at it? Today, it's buzzing away in trade. Last few days also we've seen that up move coming in. Is there anything indicating on the charts for an up move furthermore?
So that big sell-off day which had happened for Polycab when the stock was down I think 20% or 2 or 3 times, when the stock was down 15 to 20% odd, it had fallen down from 5,600, 700 levels to a point where the stock was almost at 37, 3,800. So I think 50% of that retracement has now gotten completed for Polycab, and that big gap which was denting the stock price in terms of the near-term trends, I think that is now completed completely filled. So I believe that this move which you're seeing today is not just a breakout of sorts for Polycab, but this could probably be a potential restart to the trend for the stock. The stock has also managed to take good support at the 200-day moving average. So net I would believe 4,500 should be a good stop loss for the trade, and on the upside we should be looking at 5,500 plus as a potential target.
Not just Polycab, but the entire gamut of these wire and cable stocks did see a big cool off once there was, those reports coming in on some raids happening. RR Cable was the other one as well. In the meantime, let's just take stock of what else is settling in for the day. Maruti, HDFC Life, Axis Bank, Infosys, ONGC though has also flattened out, as is the case with ICICI Bank. You've got a very tempered move from TCS, from a Dr. Reddy's, M&M as well. It's less than 0.5% higher as we speak right now. The Adani names are okay. Reliance as well, a sub 1% kind of move. Similar is the case with the Tata Consumer, with the Titan, Hero MotoCorp, Sun Pharma, or for that matter, Eicher Motors as well. Kunj, you did highlight the auto ancillary space, but what about the pure play auto majors? Because there the bull party, continues unabated. Be it in M&M, be it at Tata Motors or Maruti, which, as later as yesterday, managed to hit that 12K mark.
Yeah. So again, we have to look at start by looking at the holistic picture and then going down. So as we were discussing that on a macro basis, the Indian economy seems to be doing well, and within that, more specifically on the auto and auto ancillary, auto, we have seen the numbers continuing to remain positive. Of course, a mixed trend. So you have tractors which have not been showing good growth. You have CVs which have shown some slowdown after remaining good. Passenger vehicles is something that continues to do well, and two wheelers, which earlier was not doing well, has been doing well for the last few months. Now, in anticipation of this good performance, as well as in line with the market, which had anyway been going up till hardly about 15 days ago, all sectors which were either non-participative earlier or which had been giving good numbers or expected to good numbers moved up, and within that, auto also moved up. So yes, while auto ancillaries is something that will be positive for the multiple reasons of export and domestic mix, of ICE and EV mix. The auto OEMs also will obviously be the beneficiary of the overall demand pickup that has happened, assuming that it sustains.
Okay. Naresh, I want to just talk about Zomato. There is no stopping this one, no matter how much of an up move that we've seen in the last 1 year. It still continues to see an up move, maybe 1-2 days of subduedness, and then again you see the run up coming in. Any specific indication that one should watch out for Zomato? Look at it, just 52 weeks. 222% from 50 to 170 levels is what it's managed to touch as well. So what's the view on this in terms of technicals?
So technically, this is the only stock after 2 years of IPO and then falling down almost 50-60% to recover back above the IPO prices and the highs made around that time. So 160-65 was the high. It went above those levels a few weeks back, then corrected back to 145, and now is again testing that 170 mark. So clearly, there is a lot of relative strength. And at current levels, the problem is the stock has already gone up 3x over the last 1 year. So the risk reward is not great, but if somebody has a pure momentum view, one could still look at it as a buy with 160 as a stop loss. Because clear relative strength, one of the few names which is actually above the highs of 2021. So out here, momentum is strong, and all through this move from 50 to 170, the stock did not correct much. So clearly a lot of strength, and the corrections also have not been very large.
Kun, just wanted to get your sense in on the entire urban recovery, right? Zomato also technically being one such play. Wanted to understand whether should one stick to the urban consumption theme, the entire premiumization theme, or should one now look at maybe the rural plays which have a higher chance of a comeback perhaps? Whenever it happens, it's going to be a bigger alpha in that sense.
So is that question to me?
Yes, Kunj, to you.
Yeah, sure. So obviously any sane investment approach and advice will be that you look at the optimum combination of fundamentals and valuation. And within that, if we look at that, the consumer as a space, and as you rightly referred, has been continuing to face slowdown for quite a number of quarters. And when I say consumer, it extends right from fast-moving consumer goods to consumer durables, to electrical, electronic equipment manufacturers, household appliances, and things like that. And because of the demand slowdown, which obviously has reflected in their numbers remaining subdued on the top line and bottom line growth. In fact, in some places they have got benefited because of the raw material price correction. Now, in any growing economy, ultimately the demand has to come back, and this urban-rural gap demand has to kind of merge. So the rural demand will pick up now. Possibly, will it be after the crop comes in, or because of the election and other things, the government sending money into the hands of the people comes in, or whatever be the other factors, and that's where we will see the demand coming in. So these sectors, given the way their valuations have become attractive because of the non-performance of the overall sectors as a whole, obviously become a good investment case for a medium to long-term investor. As I said, from the point of view of optimum combination of fundamentals and valuation, which is what a medium and long-term investor has to look at. A short-term trader will continue to look at the trading pattern, the stop losses, and things like that. But yes.
Okay, and since we're talking about the entire Indian consumption theme, we had Vinay Dubey from Akasa in the studios earlier today, and he says that Akasa is on track to be one of the top 30 airlines by 2030 and also list before that. That's the word from none other than the founder and CEO. Let's hear out a slice of that interaction.
We don't plan for market share.
Okay.
I mean, and you can, have that as a headline. If we plan for customer service, we plan for employee centricity, we plan for our cost structure. We've got 226 aircraft on order, and here's another first. If you look at the 120-year history of global aviation, there's not one airline in any part of the world that have placed an order of 226, well, not even close, not even 200 aircraft, not even 175 aircraft within 19 or 20 months. So growth in market share is something that we'll get over a period of time without having to focus on it, right? And so we're focused on financial stability, we're focused on service excellence, we're focused on employee centricity, we're focused on reliability. These are the things we're focused on. I don't even look at that market share statistic because we know that by 2030, and here's a bold statement that I'll make, but we know by 2030, Akasa will be one of the top 30 airlines in the world by size. Part of the reason in India there are no issues is because some of the variants that are flying in India are very different from the variants that have reportedly had issues on the Boeing side. So I want to make that extremely clear. I want to make that clear that our aircraft and the rest of Boeing aircraft continue to get certificates of airworthiness from the regulators, not just in India, but the regulators in the US as well. So I want to be very unequivocal in the fact that these are extremely safe aircraft to fly on. And so no, we're not looking at any changes as far as the aircraft that we're flying today here in India. Formally distributed, sure. But we'll say these 202 remaining aircraft will be delivered by 2032.
Okay.
Yeah, and it goes a little up and down. In the initial years, it'll be a little less. It's easier for us to absorb 30 aircraft on a base of 150 than it is to absorb 30 aircraft on a base of 40 or 50. So clearly the growth rate in terms of number of aircraft will be, will increase over time, even if the percentages decrease, but the number of aircraft deliveries by year will increase over time.
Okay, that is obviously about Akasa Air. We did have Vinay Dubey joining in with us this morning. But, let's shift focus and talk about the cement pack. Look at Ambuja Cement, ACC Cement. All of them are in focus today. Kunj, I want to come to you and understand that, what is it that you are reading in terms of the cement names? Okay. So, Kunal, I'm going to come to you actually, and let's understand in terms of the charts, whether you see something like an ACC, Ambuja, Dalmia Bharat, what should one actually look at over there? Anything attractive that one should watch out for in the cement pack?
So from the larger cap names, I think UltraTech Cement is attractive. When you look at this comparatively with ACC, Ambuja, UltraTech Cement was one of the first ones to try and come back to that 10,000 plus mark. and then in the last leg of the last 1 to 2 months or so, the stock has recovered or corrected almost 10%. So from I think 10,400, 500 levels, 96, 9,400 is where the stock had tested towards, and now it's come back to that 9,600 mark. So in terms of risk reward, the positioning for the stock with respect to the other peers, the fact that the stock was one of the leaders in terms of the initial breakout levels, I think all of that augurs very well for Ultratech Cement. So I'll probably try and pick that.
Okay, Ultratech Cement, that's coming in and was as one of the top ideas. Another buzzer in trade today, and let's bring up the BSE chart. That's the Bombay Stock Exchange. You've just got an upgrade coming in today from the House of Investec. They've upgraded the stock to a buy and put a target price of 2,800 per share on this particular stock, which also means an implied upside of a good 25% even from the current levels on the stock, anticipating further market share gains with the traction in the Bankex in particular. That's BSE in trade for you. Kunj, do you believe that with the equity... Okay. Naresh, let me come to you. Stack up a chart for some of the AMC stocks for us, BSE as well as Angel One all added in together, and what's looking like the meatiest of them all?
So BSE has been a clear outperformer. It went through a sideways phase for the last 4 or 5 months. It's corrected from 2,600 to 2,000 odd levels. The good point is the stock made a similar bottom back in December end also. So it has held down above those levels. So eventually, this is an indication that the stock looks pretty interesting. And this whole financial basket, whether it is AMC's broking stocks, they've had a decent enough 20-25% correction. And now some of them look very interesting. So Angel One from 3,900 has come down to 2,600. The last breakout point for the stock was 2,000 rupees, which is what the high was for the stock in 2022. So Angel One at current levels also looks promising given the correction. ICICI Securities is a special situation case wherein if the delisting fails, the stock could do well. So overall, as a basket, a lot of these names look interesting. The AMC basket as such, we had a very strong move and could consolidate. So HDFC, AMC, Nippon Life could consolidate. But I would be more interested in the broking names and BSE itself.
The broking names, not the BSE. That's the top call coming in from Naresh right now. Let's just take stock of some of the other buzzers as well in trade, and just want to highlight what some of the other stocks, are up to. Let's just bring up HDFC Bank. That as well, like we told you, that's sort of settling in at a 1% odd gain kind of mark. BSE, we just flagged off. That's looking very smart. Earlier today, of course, you had an upgrade coming in on Bajaj Finance. You had an upgrade coming in on Avenue Supermarts as well. So let's just check in on what these names are up to. Bajaj Finance has also had a very sedate sort of day today. 1% at the max is the kind of gain that it had. The other one, of course, is Avenue Supermarts. That's seen a bigger move today of about almost 2.5% coming in. Kunal, let's just reiterate for the viewers who didn't tune in the morning, because you've been tracking the charts of Avenue Supermarts since when? What, 3,400, 3,500 thereabouts?
Absolutely, yes, Aisha. And I think it still looks very attractive. In fact, today the stock has given a fresh 52-week breakout, and this is coming after a huge amount of consolidation, because the stock post listing, which was around 600 levels, moved up to 5,500, 600 mark in 2021 mid, and from there till the last 2.5 odd years, the stock was into a downward consolidation. So this seems to be now a very strong indicative of a fresh trend emerging for Avenue Supermarts, and I would believe that this potentially should take the stock back towards 5,000, 5,400 plus mark, at least over the near term.
Okay, that's the case coming in on Avenue Supermarts. There was a big upgrade on Cummins as well earlier today, and that was from HSBC, upgraded to a buy from the earlier neutral rating, and the target price also up to 3,300 from the previous 2,600. But let me just quickly get in some BTST trades before we wind down for the day. Naresh, what's on your list?
So first is the Warren Oberoi Realty, a breakout trade here. Stop loss at 1390, target price of 1450. Second is the Bayern Tata Steel, showing the latest strength and momentum. Stop loss at 148, target price of 155.
Kunal, what about your BTST ideas?
So I'll go with Jindal Steel as the first stock. Very interesting chart on the short-term basis, a swing breakout on the hourly charts, as well as a breakout above that 800 levels. Puts a buy with a target of 880. Stop loss remains at 770. And second would be Aban Power Grid. This could be a very strong V-shaped recovery for the stock, very rarely seen for the stock. But I believe that the stock is showing all of those classical signs of a breakout. I would suggest a buy with 285 as a target, stop loss at 265.
Okay, let's wind up for the day and let me hand it over to Vinny for the closing trades. Vinny?
So absolutely not ending on a bad note today when you look at it for the Nifty. 22,000 is what it's managing to hold on to. 0.8%, 0.9% of gain off the day, slightly off the day's highest point. Let's look at what the Nifty Bank also did. Nifty Bank also saw good gains as well. Nifty Bank holding on to 0.8% in gain. And we saw all these private banks, PSU banks, all of them buzzing away in trade. HDFC Bank also in terms of a contributor to the Nifty also saw good gains. Nifty mid cap and small cap, the broader markets, that's where we saw most of the action happening today. Look at the buzz that is coming away, closing at the day's highest point. For the Nifty mid cap up to 2.5%, small cap 2 up 2.5% in trade as well. Advance decline ratio clearly today is in the favor of advances versus decline. When you look at it in terms of what Nifty Realty did, that was the top sectoral gainer today. So pull up the charts of Godrej Properties, DLF, Prestige Estates, all of them, Brigade Enterprises, all of them buzzing away in trade. DLF also closing at almost the day's highest point. Similarly for Godrej Properties as well, strong gains that we are seeing. PSU as a pack today, we have seen a buzz coming in around for PSUs. So whether you look at PSU banks or overall even other PSU names like even the defense names, they all are doing well. Steel, Tata Steel, SAIL, Nalco, Hindalco, all these names also buzzing away in trade in terms of the metal pack as well. So yes, metals as a pack overall also saw a nice buzz over there. Let's pull up some of these other charts as well that one could watch out for today. In trade would be Zomato. That's seeing strong gains. Nykaa, so the new age tech companies also saw a very good traction coming in. eMudra, surprisingly a smaller company, a mid-small cap name, but surely saw a very strong move today as well. On the back of that, the recent listing, the today's listing we talk about, Crystal, that's a muted listing that came in, closing the first day on a muted note as well. Nothing exciting that could be happening in Crystal as well. So yes, that's how as of now we're seeing in terms of the markets. Let's look at some of these other movers that we saw in the small cap side. So yes, gains came in from BSC, IRB as well as Intellect Design and Incorpor as well, which saw a buzz as well. So yes, keeping an eye out on all of these stocks today, but ending on a good note at least.